Hey traders, checking in on the stock market today. Bulls keeping their complete control. SPY on day number 11 with a higher low every single day. Earnings season is going to be kicking off here Wednesday and Thursday. The financial sector, which hit all-time highs today, is going to be having its earnings start with the tech sector in a couple of weeks. We've got the Coinbase IPO on Wednesday that's garnering a lot of hype, and I'll go over a couple of trades, some good, some bad, at the end of the video. Before we get into it, we've got a second YouTube channel here at The Chart, guys. I will link it in the comments of this YouTube video. Make sure and subscribe to it. Just a little different style of content and attempting to reach different eyes, but building a channel here, and the goal of this channel is trade walkthroughs and TA lessons, essentially. So it's not your regular market summary like this video, just overview of crypto or overview of the stock market. It's more in-depth and more hands-on as far as teaching you how to apply TA theory through practice and post-trade analysis. So if you enjoy our content, there's more. So the S&P 500 futures chart, we've got our 4-hour higher lows for what feels like forever. And that has been the entirety of this move. Higher, low, every single period of consolidation. We had another one last night. And here we are up at the all-time high, which is resulting in the SPY spectacular pattern of a higher low every single day, 11 days in a row. Look at the closes at the high of the day almost every time. It's very impressive. And it's going to come to an end very soon. But again, we're just going to look for a daily higher low after that. So as I said in the last video, hedging, absolutely. Fighting the bulls, absolutely not. NASDAQ. So the NASDAQ futures chart, 4-hour time frame, is tightening up here. We had our high, low, failed to break resistance, held support, and here we are still holding strong. So that's giving QQQ a daily inside bar. If the inside bar breaks bearish, we look for a daily higher low. If it breaks bullish, we are at the all-time high right there. So again, I chose SQQQ as far as my hedge, and it was red today, or QQQ was red today, but certainly not by much. But again, the point of a hedge is just protecting against downside, so it's serving its purpose. IWM, trying to, really I'm just looking at the 2-day time frame to condense it down, because it's our low, high, double bottom, lower high, and it's the bulls trying to form a higher low compared to that 208.03 base of support. So essentially just viewing it as an equilibrium, and we'll be watching for the 2-day higher low to be set sometime in the coming days. Keeping in mind that XLF earnings are going to have an impact on IWM. They have more exposure to the financial sector than to the tech sector. I need to double check those weightings because they change, but last time I checked, that was the case. Financial sector, all-time high close. It was a double top most of the day, and we only broke it by 2 pennies, so certainly not convincing. But again, another sector that's right there at the all-time high, and that's the reason I chose QQQ as my hedge, because XLF and XLV are knocking on the door of the all-time high, as is QQQ. But when it's SPY, we can have QQQ pull back and one name break the high and keep SPY strong, or one name pull back and the other one go up and keep SPY strong. Essentially, in my view, the S&P 500 as a whole has a bit more confidence knowing that it's got multiple sectors that can help keep it strong. So earnings on Wednesday and Thursday, they have the most earnings those 2 days, and that is going to dictate short-term momentum here. Bulls are certainly positioned well where if it's a bullish reaction, we will be in clear new all-time highs. Healthcare sector, daily tightening range broke bullish and didn't really do anything today, but the all-time high is less than 1% away. So again, we're just sitting there, and if we do not break 116.19 support, the bulls will keep their complete control. And they certainly have complete control at the moment. Biotech sector, weak, down at the low, 126.26. We broke that level, but only by 17 cents, so we would still consider that a double bottom. But again, look at the closes. We just looked at the SPY closes showing momentum at the high of the day. Look at these XBI closes at the lows. So there was a nice bounce, and I did trade it. We'll go over that at the end in the trade review. But the bears have complete control. And if we see another leg down after 126.09, next support level is down at, really the next level is 123.48. Still a potential falling wedge to be keeping an eye on. which means the bulls would need to hold that support level if it's going to remain in play. It's a bit of a sloppy resistance line, but you get the idea. I care more about the support at the moment. So it's worth paying attention to. But there's two ways this plays out. You look at a name like this, and this goes for all individual names that are weaker as well. There's a lot of growth names that are way off their all-time high while the market is raging bull. So we either see the broader market pull back swiftly and significantly with all of our major sectors dropping to the lows at the same time on any given day, and we pull back 3-4% from the all-time high and just a big reset. If that happens, these names are positioned very poorly because that fear will hit everything. If it's not a fear pullback, if we get QQQ pulling back while XLV goes up or vice versa, and it's just a healthy daily high or low, we look for the rotation, and that could be a scenario where we see, big tech profit taking, and maybe they flow back into the biotech sector. It just opens the door for the possibility that we don't have to keep dropping on the weak names. We can see rotation go on, but again, there has to be a lack of fear in the broader market for that to be the case. So how SPY does pull back, which is inevitable, potentially tomorrow. If I were a betting man, I'd probably be betting tomorrow. Breaks the pattern of a higher low every day. But how it pulls back is going to be very key as far as how it's going to impact all of these names that are so much weaker. SMH. So we had NVDA with a huge day today. Investor Day, and they just put out like 6 news releases. How's that for volume? Just a massive move and all-time high test. Not there yet, but we're right there. And that didn't have a ripple effect in all the semiconductors. Look at AMD do the opposite. Certainly looks like it's being hurt by the bullish NVDA move. So SMH as a whole is still a potential daily bull flag. And this goes right into a member asking today, how many candles generally will you allow for a bull flag? And my answer is, there is no answer because you can always change the time frame and change the number of candles. I look at this and I would say, is this a daily bull flag? And you can make the argument, well, it was a daily bull flag attempt, but we failed to break the high and now we're still consolidating. Or you just pull up the 2-day chart, it's a daily bull flag or 2-day bull flag. So it's still very healthy is the bottom line. We broke, actually, did we break support? 251.16. So we did break support with a lack of follow through. If the bulls can regain the hourly trend in their favor tomorrow, that 2-day bull flag certainly remains alive. Does that look like a cup and handle? Yes, it does, because it is. All-time high, consolidation, failure to break the all-time high, bull flag attempt, and if we can confirm that bull flag, we'll look for new all-time highs. So there are no red flags here. We would need a little uptick in bear volume, and pretty much we can say at this point a loss of the daily EMA 12 here if we're going to start to negate the possibility of that bull flag. Solar, 2-day equilibrium, still very weak. And again, same thing. This sector is positioned very poorly for fear in the market. If it's not fear that leads to consolidation, if it's just rotation, then we could potentially see a shift to the bulls. But there's no sign of it right now, and it's just a 2-day equilibrium. Lower high was set, and the bulls now have to hold 81.07 for a higher low to try and be set. And that pretty much means the bulls need to show up and get a couple green days here before breaking 81.07 support. MSOS, bearish reaction to APHA, which is in Canada, but we had a big 10% plus drop on APHA earnings, and it took everything down with it. So again, the inability to change the daily trend, it remains a weaker sector. 38.80 is support. Bulls have to break 44.66, and at this point, bulls are just hoping to hold 38.80 and form a tightening daily range because that resistance is about 6-7% away. So hourly trend change back to the bulls needed, and pretty much we have not seen 2 convincing bull days in a row in a month. And that obviously has to change as well. The VIX started the day higher, but the bulls controlled the entirety of the day. Could this be a daily bear flag? Absolutely. We did break the pattern of a lower high every day for 7 days in a row. That broke, but certainly not convincing in any way for a bull move on this daily time frame right now. And again, we're going to be watching how does the broader market consolidate when this little mini euphoria streak ends. Is it with just one or two sectors pulling back, or with everything pulling back? The dollar is trying to set a base of support at 92. It's failing to change the 4-hour trend. Every bounce is just a 4-hour lower high. So anything under from 92.33 is just a 4-hour lower high yet again. 92, key support. If that breaks, still looking for a daily higher low, but obviously way more pullback than the bulls would like to see, and tons of space for a daily lower high to form once we shift momentum. Metals have started pulling back though. Daily consolidation underway. I trimmed my position Wednesday a wee bit early, but pulling back, and now it's up to the bulls. Form a daily higher low, the sooner the better, and confirm a daily trend change. And again, we can be using our retracement tools to see, is continuation likely? And right now we're at the 382. If the bulls can set the daily higher low here, it is favorable. If we drop down to the 50% retracement and beyond, we then start to be looking for the potential that it's an equilibrium. So the bulls really want that higher low and daily trend change to happen soon. Silver's already pulled back 50%. So low, high of the bounce, have to hold 23.78 and break 25.62 to confirm the daily trend change. Burden of proof is on the bulls. Great bounce last week, not enough. Miners weak today. Support was 33.85 on GDX. Broke it, but only by 2 pennies, so a double bottom. And again, the burden of proof is on the metal bulls, and the miners are not going to keep going up on their weekly trend change, which looks good, but we have to see the gold and silver bulls confirm daily trend changes for this miners weekly trend change to get followed through. Oil, we have that 4-hour tightening range, and it broke bullish with 0 follow through. We're now back testing previous resistance as support. So again, whenever I draw a pattern like this, I recognize the break, and then the first thing that I do is zoom out and say, okay, what price levels matter to me? Because that bull break didn't break the daily lower highs. Anything under 61.75, just another daily lower high. So essentially, we're right back where we started, and we've been trading over the last 5 days within the range of April 5th. So it's still sideways without much clarity. And the weekly time frame, just grinding the EMA 12, trying to set a weekly higher low, but bulls certainly would have preferred a much more convincing higher low be already set at this point. If we lose the 4-hour, well, we didn't even change the trend. It was a bear break into a bull break into nothing. So still very indecisive. Natural gas, solid bounce today. So again, it's a weekly bear flag that confirmed last week with a lack of follow through. So the nice little bounce over the last couple of days is opening up the possibility for a momentum shift back to the bulls. They need to confirm a daily trend change, and they need to break 2655. But to not follow through on that bear break is definitely notable. And just put yourself in the opposing position. If you're looking bullish, say, how would I feel if I'm a bear? And if I'm a bear, I am not comfortable with what's happened the last 3-4 days since the bear break last Tuesday. So again, how are we going to consolidate? We know we're going to consolidate. What I care about is how is it going to happen? Rotation or fear? They're very different. Plenty of fear tops hit in the past, and XLF earnings will be key in the short term. So, trades I took today. Decent day, one mistake, dumb mistake. So let's go in order here. First trade of the day, PLTR. So recognized weakness on PLTR and some red flags, but we were also crushed, and I like oversold bounces. So I was looking at an oversold bounce, and I entered on this drop here. I had an entry at 23.53, and I was going to enter one more on a drop down to 23, under 23.40. We then started a bounce on the 2-minute time frame, and I was watching it on the 2-minute time frame, and it ended up being a bear flag And that was enough for me to say, no, I don't want another entry. But my first entry is small enough where I don't have to stop out just yet. I can give the bulls a little bit of a chance. I gave them a chance on this 5-minute candle, and they didn't prove it. And so I exited with a small loss. And essentially it was just me, I don't want to babysit this trade all morning. I was not planning for this trade to be a part of my morning trade. And it was this 1 minute higher low. Have to break 23.60 here to get the bounce going. They failed, and I exited when 23.36 broke. So in the end, it was about a 20-cent loss, which is about a 20% day loser. So just keeping it real small, because again, if I started to rationalize and say, well, the 5-minute RSI is still crushed and the 15-minute RSI, we're due for a bounce. Next thing I know, I'm just staring at this position for the next hour, and not only am I trying to manage it with buying and selling short term to keep my average low, but then I'm missing other opportunities because I'm only focused on this trade that I wasn't even originally planning to be in. So I'll take that small loss every time. Bulls did not prove a bounce, and I bailed. So started the day with a 20% day loser. At that point in time, I think I was already in Tesla. As you know, I've been watching Tesla on a daily basis the last 3 or 4 days, just saying, when is the bullish correlation going to show up to QQQ? Because the setup is here for bulls to take over and act as laggards to QQQ in the tech sector. We had an upgrade today, which helped pre-market, and then the bulls controlled volume, highest volume in a few days, and a decent close. So I entered, I watched the initial bull move, 2-minute time frame, and I just grabbed a starter at 688. The bounce was already 1% underway, so just grabbed that starter and then just monitored it for the rest of the day, and the bulls held on fine, so I did swing that position. And I did exit half of it when the 5-minute higher lows were lost. So I exited half on this bear break of 699. So that puts my break even on this swing position at 677. So very comfortable. And my goal is for a break of 718. We got to break 708 and 718 ideally tomorrow on increasing bull volume if we're going to get ideal scenario. So that is a swing trade I'm in. If we do not break 708 tomorrow, I will bail. That is a bare minimum requirement for me to continue holding that position. So that trade was a day maker. At 698, that's a day maker, so 20% loser versus a whole day maker. Next trade, XBI, oversold bounce play, watching key daily support, which broke, but only by pennies. And it was just a 5-minute higher low play. I was watching this 5-minute equilibrium. So low, high the bounce. I didn't touch the weakness. I actually said if 126 breaks, I'll make an entry, and it didn't. So higher low, lower high. I made my entry right here after this candle had formed and we started to follow through for the bulls, and I put my stop right under 126.49 because that's either going to be our 5-minute higher low into a bull break, or I'm wrong and I don't want to be in the trade. So we got the bull break, and I exited half too early. That was me being over conservative, because on this candle I said, well, we got the 5-minute trend change for the first time in the morning, but there's no bull volume. And then of course the next candle, there's your bull volume. So it could have been a day maker. In the end, it was a half day maker because I exited half of my position. When did I exit? I knew on this bounce that we're just looking for an hourly lower high. What is the indication that an hourly lower high is being set? It's a loss of the 5-minute uptrend. So every time we set a 5-minute high or low, I'm just walking my stop loss up. So I put my stop under 128, 127.99, and I stopped out when the hourly lower high was set and locked in my half-day maker. So again, keep my losers small, 20%, full day maker, half day maker, which puts me up 1.3 day makers. And then I fumbled NVDA. Monster move, 5-minute bull flag, clear as day. Entry at either 590, 591, I forget which one. And instead of putting my stop under 588, the low of consolidation, I mistyped a number in my stop loss, and I was stopped out right above the key support. And we then ripped and ripped all the rest of the morning into the afternoon. That would have been a really nice trade because I took a large position because of the bull volume, the news releases, and my stop level was so close, I can use a much larger position and have the same amount of risk. So, fumbled it, but that's all right. It happens, and for me, it's just a wake-up reminder. Check your orders, don't get lazy, stay sharp, etc. And that will happen inevitably, time and time again. Sometimes you'll sell when you mean to buy. It's just the name of the game, and what you have to do is ensure and make it a goal for as long a streak. It's like the workplaces, 74 days since last workplace accident. You want to make that streak before you make a dumb error as long as possible before the next dumb error. So, I'm on day 0 since a workplace accident. I hope you had a good day out there. Let's keep an eye on our major sectors and XLF earnings Wednesday and Thursday. And we will see you tomorrow. Don't forget to do good things. So this is the new garden, and it just came from a big mulch pile being here. We got rid of the mulch pile and left the base. Might as well plant stuff in it. Got 5 different kinds of mint, spearmint, mountain mint. I don't even know what else, but 5 different kinds of them. And a bunch of stuff that we'll watch grow throughout the summer. This is year 2 of the asparagus coming up, and I'm going to let it do its thing for another year, and I'll start harvesting it on year 3 when it's nice and established.